Internal Revenue Service IRS tax news dated September 13th, 2019. Treasury IRS release final and proposed regulations on new 100% depreciation. Washington. The Treasury Department and the Internal Revenue Service today released final regulations. There's a PDF link to them here, and additional proposed regulations, PDF also link here for that, under Section 168K of the Internal Revenue Code on the new 100% additional first-year depreciation deduction that allows businesses to write off most depreciable business assets in the year they are placed in service by the business. So this is big news for the depreciation deduction. The regulations released today on IRS.gov have been submitted to the Federal Register and may vary slightly from the published documents due to minor editorial changes. The documents published in the Federal Register may be the official documents. The final regulations finalized the proposed regulations, link to the proposed regulations here, issued in August 2018, which implement several provisions included in the Tax Cuts and Jobs Act, the TCJA. The proposed regulations contain new provisions not addressed previously. The 100% additional first-year depreciation deduction generally applies to depreciable business assets with a recovery period of 20 years or less and certain other property. Machinery, equipment, computers, appliances, furniture generally qualify. The deduction applies to qualifying property acquired and placed in service after September 27, 2017. The final regulations provide clarifying guidance on the requirements that must be met for property to qualify for the deduction, including used property. The final regulations also provide rules for qualified film, television, and live theatrical productions. Additionally, in the proposed regulation, the Treasury Department and the IRS proposed rules regarding, number 1, certain property not eligible for the additional first-year depreciation deduction. Number 2, a de minimis rule for determining whether a taxpayer previously used property. Number 3, components acquired after September 27th, 2017, a larger property for which the construction began before September 28th, 2017, and number 4, other aspects not dealt with in the previous August 2018 proposed regulations. The proposed regulations also withdraw and repropose rules regarding application of the used property acquisition requirements, number 1, to consolidate groups, and number 2, to a series of related transactions. The details on claiming the deduction or electing out of claiming it, see the final regulations or the instructions to Form 4562, which is the depreciation amortization, including information on listed property. There is a link to that here. For tax years that include September 28th, 2017, see Rev Procedure 2019-33 PDF. There's a link to that here. For further information about making a late election or revoking an election, taxpayers who elect out of the 100% depreciation deduction must do so on a timely filed return. Those who have already timely filed their 2018 return and did not elect out but still wish to do so have 6 months from the original deadline without an extension to file an amended return. For more information about this and other TCJA provisions, visit IRS.gov tax reform. There's a link to that here.